we go into mid-September, we're going to start seeing reports that are mixed, some good, some bad, and might be some surprises in there that are more negative than positive as we go forward. The other thing, there's a dynamic that's happened in the markets. I haven't been around for a long time. When I started in 1979, the volume on the New York Stock Exchange was 40 million. And the other thing that helped that happen, and it wasn't just Robinhood, but it's fractional shares.
Sure.
So my favorite line is, investing used to be for someone, now it's for everyone. You know,
but isn't that a good thing though? Because you have more liquidity.
No, it's a very good thing.
Yeah.
It's a very good thing. And you know, and the fractional shares is given access to markets. Welcome everyone to the Kendall Report. It is Tuesday. We have a shortened week and it's going to go faster than normal, I suspect. So just a real quick reminder here from the standpoint of what we're likely to see this week is, I talked about this last night, that we're likely to see some pullback here, and some of the key numbers I'll review. I know I went on a very long rant last night on the S&P on the long-term outlook, and so I'll try to tie some of this together as we go forward through this week. I'll also cover the Dow tonight. I think that's worthy of some coverage. I talked about this a number of weeks ago, and just trying to get everything walking forward here as we come into the Fed meeting. So interesting configuration, I think, in the markets today. We just really couldn't get anything going. We hovered pretty much down at the lower end around S2 today, for the most part on the S&P. NASDAQ, once again, a little stronger than everything else, but we're really just looking at this backfilling that I was talking about last night. And we're already coming in pretty quick to some of these numbers. I believe we printed 44.99, and I think we have a little bit of a bid going right now, but not a lot. So talk about a couple of things that I named this video tonight, and I think this will be typical since I don't have the database to review. Possibly we'll get into some stocks at the end. I actually am going to cover the home builders because there's a couple themes that are kind of coming out when I was preparing for tonight's broadcast. One is the inflation situation, and I keep telling you that I believe the Fed will raise rates again, and I'm almost positive they will. It's not, we saw a pretty good rally in crude oil yesterday, primarily because Saudi said they're going to keep the cuts into year end. And I suspect they're not going to let them off at all, as long as demand stays reasonably high and all of it. And so we could start to see a number of things start to flow back into this inflation picture. And I think just a few elements that the Fed is going to see out there is going to keep them keep that foot on the pedal. I keep probably going back 6-8 months ago, I was talking about that the terminal rate is somewhere around the 5.5 range. There may be even more needed to be done. I don't think the inflation fight is over. I know it's moderated, but just like it wasn't transitory, I don't think it is over yet. And I think the Fed's nervous about this whole scenario from that standpoint. So, yeah, we'll just keep an eye on it as we go forward. The one thing that is starting to flow out, and I was just preparing a few minutes ago, I was going through, and I'm going to go through multiple cities. It's kind of motivated me. But I almost named this video tonight is real estate rolling over. And we saw some pretty big moves in the home builders today. We saw some pretty big moves in the home construction area, down 3 and 4+%. And then we also saw a bunch of movement in the banks because the Russell got hammered today. So there are some themes that are unfolding here as we go through, as we come through this shortened week, and as we move forward toward the Fed meeting. And I think it's going to get really, really interesting once we get through this week and start to look into next week as well. So let's just talk about a couple more things, and I'll circle back to this inflation returning story that's coming out. But let's take a look at Wednesday's economic stuff. We got mortgage index coming out. It was up 2.3 last month. We'll see how that comes out. I suspect just that little softness that we had in the 10-year and some consolidation, that's enough to probably keep a little bit of a bid or more mortgages coming in than normal. We have the trade balance tomorrow. I'm not sure anyone cares about that. Minus 68 billion. I can tell you, if I flash back to 1987, that number, the trade balance was supposedly the number that triggered the 87 crash. You couldn't find anybody that actually believed it that day, and I was quite involved in an institutional desk at the time. So it was, nobody was really talking about it, but that's what the talking heads came up with after the aftermath. There was some talk about it, but it was not really the trigger. So that's the other thing that it's even worse. Think about back in 1987. I know I'm an old dude, but we didn't have the social media. We didn't have the instant communications, and everything moved really super slow back in those days. Now everything moves fast, and people make up stuff, and the stories that get out there to affect the market sentiment happen so quickly that it's kind of crazy. I know certainly if you're involved in the crypto space, not Bitcoin, because Bitcoin's really not crypto, but in the crypto space, you certainly know all about that media effects and the social media effects. On everything else, though, on stocks and everything else, it's the same scenario. And we just get these algos that pick up these stories, and it takes one little story. If you remember, looking back on last week, the JOLTS number was the big number. And then we find out that, the JOLTS were kind of tainted because nobody reported, or there was a lot of underreporting that happened during that on that report. So it's a very unreliable report, but the markets reacted like, man, that was what triggered the rally, because last week we had a pretty decent rally in the market. So very interesting. Nothing really changed, but the way that these markets work now, highly affected by all of these events that happen out there, and most of them are not material. And that's the hard part. I used to always joke back in the old days, it's okay to watch CNBC as long as you have the sound off, and it's still the same kind of scenario. You really don't want to hear what any of these people are saying unless you're looking to fade them. I haven't watched much of a lot of times I'll watch Bloomberg in the early mornings. I haven't watched that for days and days. I haven't influenced, and I always tell you that you need to be really careful and filter out what you're hearing and what you're exposing yourself to. And sometimes it's good, sometimes it's bad. But the one of the things that came out of today was the inflation story, and because of one market, because crude oil surged. And that was a story that was resonating around the markets, and there were some of the talking heads. I think the Fed goes into, I think it's next week, I believe, it goes where they're in where they're not going to be able to comment on anything. They're going, and that'll start. So then we'll get into this dead zone, and everybody will start speculating as we come into the Fed. Just looking here, a couple other things that is coming out tomorrow. ISM, non-manufacturing, expected to be 52.4, which is pretty much where it was last month. I talked to you about this quite a bit. Any of the service indexes, any of PMIs, anything that's non-manufacturing affiliated is usually above 50. Anything under the manufacturing is under, including we're seeing, factory orders, all this stuff is a little bit weaker. And so this is where you get the contrast in the economy. And depending on your opinion and depending on the commentator, people you listen to, me included, I guess, depending on what their view of the world is what they're going to promote. The metrics are going to promote to support their story. And I try to stick pretty much to the quant stuff, looking at the algos, looking at the database. Like I said, I hate having this leg where I don't have the database output today. It'd be interesting to see if there's any backpedaling going on in the database, and I'll talk about that in tomorrow's video. But as far as this going kind of all over the place tonight, but I'm going to go back to real estate for a minute, is one of the things that I'm going to get seriously researching about is the rental market, and specifically single family house rentals, not the apartments. So and what I'm seeing, I just skimmed through a bunch of stuff here from the standpoint of going through Phoenix, went through Scottsdale a little bit, but massive price reductions on single family rentals. It's really interesting. I don't know if there's nobody showing up and they're finally starting to see some pressure there. I think that rental market is really on the single family individual homes, like I said, not on apartments. I haven't really looked at those numbers. I think they're fairly stable. They're more corporately run. But even the houses are that way as well now, because we know what BlackRock, they're trying to buy every house on the market. And I suspect, I guess this is where it goes to, you will own nothing and you will be happy. Maybe that's what that is all about. But my point here is that I'm seeing a lot of reductions in prices. And I've used this, the Realtor app, just to go through different markets, especially hot markets, some markets that have been cold. Just follow a bunch of houses. I heart them. I've got multiple email addresses where I can watch these things. And it's very interesting because we're still seeing a fair amount of price drops in areas, as well as now that I just happened to run across this rental situation, just looking at things the other day. So that'll probably be something I'm going to watch very closely, see if I can get some kind of hypothesis on what it really means. Is there something going on here? And, I know I'd really freak out a bunch of people if I ended up to go into there's a recession coming, because now I see that Goldman Sachs is going down to 15%. It's starting to make me a little bearish here, folks. Just hearing, I told you I grew up in the institutions, and when these guys start getting bearish, I guess bullish in this case, that it's probably a good time to start looking at the other side of the market. And we are coming into some pretty key levels as we come into year end. But I'll stick with my long-term analysis yesterday and that I did. So I still think there's a slight bias to the upside, short-term negative, and that's limited, and then possibly looking into Q4 as maybe some kind of climactic type situation. But I'll break that down. We'll go through the technicals here in a minute. Just looking at my notes, I mentioned I think banks were down over 2% today. Oil got a spike, and then the home builders all got hit. The home builders and the home construction. I'll probably bring these up because I think I'm going to be able to get through everything pretty quickly tonight. So let's go ahead and just go right into the technicals and see what we got set up here. All right, we'll start off here with the hourly chart on the S&P. We just kind of consolidated. This is what I was talking about. I'm going to blow this up a bit here tonight. This was a very choppy range that we experienced. We had a little bit of a sell-off early on, and then just chopped around, and then got a sell-off at the end of the day. And now we've got a slight little bid here. We did have a bid. It's down 1 right now on the session on the E-minis. But if you look at the hourly chart, it looks like very choppy patterns being projected here. So this is one of those, what I call a volatility bubble, and we start to get this erratic action. And it looks like it's trying to bias a little bit to the downside. I told you last night the most important number that I'm looking at here, and I'll show you on the daily chart here in just a minute, is that 44.94 pivot level. And then all of a sudden we could be looking at 44.60, 44.50 again, and starting to look a little sketchy. Thought we might be able to rally intraday today up to around 45.23, start to hit some of these other numbers, but we just couldn't do it. Look here, everything that's being projected is very choppy overnight all the way into tomorrow. So I would watch those algos. Those of you that have the indicators, please do that. And don't forget, if you want the indicators, they're at kindlereport.com/indicators. And we still have our customer loyalty program. So if you are interested and you bought the first suite, you can still get a deep discount. So let's go ahead and take a look at the daily here. All right, so the daily still has this nice upslope here, and this looks like maybe 2 days of weakness. I thought we would come back into some of these numbers here, and the numbers to watch for is 44.94 is the pivot. After that, we got 40. We look at the 10, 44.76, 44.61 is the 21 period moving average, and that puts us right in there. There were some weekly numbers that I talked about before, but there's an entire cluster right there around 44.50 to 44.70. So those are the places where you're going to look for bounces from that level. And that looks like we'll probably see it stabilize right in there. As far as anything really big coming, there is an indication that by next Monday that we will see a potential rally back in. So what I'll be talking about this week as we go through, this is already Wednesday since we have a short week. So as we come into Thursday, looking for a little bit of bounce into Friday is what it looks like right now. But it's pretty sketchy. And then if we look forward, and like I said, these forecasts change drastically as we start to get information. And I believe I'm just double clicking on this settings here. Yeah, I've got the coefficient look back to 150 and future bars looking 50 bars out, which is sort of ridiculous, but what it does do, and I picked up a lot from using that 5-second S&P chart that I've told you about. That thing is insanely helpful, especially when you're day trading. I'm putting a video together that's going to be in the masterclass that comes with the indicators. That's going to show you a day trading session and how to think and how to correlate the 5-second, 1 minute, 5 minute, and the hourly chart for intraday trading. So it was looking. I'll be putting that out here. I did part of the video today. I'm just hopefully I will get it finished the next day or so. So look for that to come out from that standpoint. So please, Banana Central, please send an email to info@Kendall and we'll get that fixed up for you. I'm not sure what's going on there. Okay, so yeah, so all of the algos, you can see the one thing that is starting to look a little better is PPM2, which that is suggesting that we're going to see some upward momentum start to come into play. And once again, all the peaks come into that third week of September. You'll see when I cover the Dow here in just a couple minutes that's going to happen. So let's just kind of go to the next level here just for a minute. I want to go back to the weekly. This is the number. We've already seen that we're hitting that number right now. Just looking at the 10-week moving average, 44.94. There's that number again. Yeah, there's that number again at 94, which is the pivot on the daily and the 10 on the weekly. But if we break through this level, sorry, my voice is breaking. If we break through this level, then we could start to see an S1. Maybe S1 right now is 44.88 and then 44.51. That's where that 50 number comes from. S2 weekly. One second. All right, sorry for that delay. Yeah, as far as the market grid goes on the S&P on the futures, I would look for an S1, R2. S1 is right at that 94 level. So watch for that to be tested. Right now we're trading 45.01. So that could happen overnight. If we get through that, then go to the S2 number starts to get into that 80 handle, which starts to map out with some of these other numbers on these higher level charts. So just watch those levels. Like I said, 44.94 is the most critical level here for at least for another day, possibly a couple of days. We can hold above that. We're going to have to trade above 45.32, but for the most part, this is what we're seeing on all this stuff. I'll go into the NASDAQ has a slightly different pattern, but similar. But we're just looking at this choppy zone, staying in a range, and just expecting that for the next several days, at least for Wednesday, maybe coming into Thursday. So here we are with the daily NASDAQ. We still have a nice angle of attack. algos on the PPM1 are suggesting we're going to maintain these levels and stay above that first derivative, which is in trend mode, by the way. So NASDAQ is back in trend mode at a plus 0.36 right now. It looks like we could come down just a little bit, but we should stay above 0.25, which is trend mode, and then a little bit of acceleration. And it looks like as we come into next week, let me just get this right number here. Yeah, at the end of next week and coming into that third week of September is where we start to, at least at the moment, forecast some weakness. But I still think this angle of attack is going to be the number to watch. And you watch this 10-day moving average here, this daily chart at 15,315. And it is, I'm just going to get a number for you here. Yeah, you're looking at 60 handles per day. So what you can do is look at what the value was yesterday and when it's going up. It looks like the algos are suggesting it backs off a little bit, but we're still on a full, I guess, trend mode here, and it's not likely to break much below that 10-period moving average. That's the extreme. So we're just going to move on and get right to the Russell. Russell had a pretty rough day. We were talking yesterday about it coming back into these moving averages. I'll bring up the RTY here in a second just to get a better view. But we are seeing, at least, it's amazing that just one day we actually printed right back into this 10-period moving average. That number right now is 1878. We printed all the way down to 1880, finished at 1880 on the low. This is the cash. Let's go to RTY here. So RTY is showing this. We're trading right on that moving average there on the 10, which on RTY it's 1885. Last trade 1884. 82 low, 84 high, pretty narrow range. But it looks like this is promoting a stable range, but it's also suggesting that the PPM2 is suggesting that the 21 is going to be the key number, and it looks like an acceleration. Right now, we're still in a downtrend, so there's a fair amount of resistance right at that line right now, which is 1938. So look for the next couple of days that resistance should, as far as a rejection from that number, should start to dissipate a little bit. And I would also look for the potential for the market grid to turn up tomorrow. If we can stabilize and stay above or around this 10-period moving average, we should be able to see the market grid turn up, which would just put us back into this range. And this is one of those moving average wedge formations that I talk a lot about. You've got the 40 period coming over the top here. The 21 is trying to turn up, but the 10 is actually still up. It's not at trend mode, but it's at that minimum value that you want to watch for on PPM1 is 0.15. That gives you enough upward slope on that angle of attack to at least supply enough support typically for the market to hold in that zone pretty good. So ultimately, and I talk about this pattern all the time, we come back in and we trade between this 40, you're looking at 1929 down to 1885. We'll just round off numbers, but that's probably what we should come back into this range. Everything looks like stabilization as we go forward with the PPM2 starting to accelerate. It tells us there should be some support levels right at that 21 SMA. So we'll start with the 10-year And then when I get done with the interest rates, we'll go straight to the Dow and then move forward from there. So once again, it looked like the treasuries were ready to hit that fib target 2, came just shy. We maintained that 40 moving average that I talked about yesterday. Let's take a look at that, at those, that reversal. This is the daily. So we got that reversal on Friday. And now today we just continue. We traded all the way up to STX here. Let me just get you some numbers. Yeah, STX was 25, 4.25, high 4.27, close 4.269. So we basically got an RTX sell signal. We should get a couple days sideways, but there's still an acceleration going on here. And overall, what we're seeing is ultimately a stabilization, maybe a big high-end trading range that's set up here with somewhere around 430 being the peak, and on the downside we're looking at the 404, 402 level, just literally going on there. Yeah, PE, I see your questions. I'm going to go through the normal stream, and we'll come back, and I will answer your questions there. So just come back to me when I finish these couple markets here, okay? All right, so yeah, so the patterns that are unfolding here are interesting. We bounced off the 10 last week. Here we are all the way up to fib target 2 all of a sudden. We've traded around this level, but we got the market grid on the weekly that's likely to keep this thing in check here. We're looking at 42.2990. That's pretty much where we were trading, is where the high target is. But then we look at the market grid, 4.309, we'll call it 431, is right now is R3, and RXT is 4.351. So that's certainly a possibility, but we should start to stall in here. You can see, and I talked about this last night, that we're seeing a fairly decent rollover on the weekly. So let's go ahead and check out the Dow real quick here. So the Dow continues to climb. The last time I covered this, I was talking about these fib targets that are up here. Right now, fib target 1, 103.48, 104.98, and 105.90. And we printed here today on this is a weekly graph here. So we printed so far this week 104.90. So we're right at fib target 2, fib target 3, 105.90, another handle up. I've been talking about, it looks like right into the end of September, we still have a nice upslope on the Dow, and I'm going to go over to a monthly chart, because I think there's a little more to be seen here on some of the longer term stuff. You can see that there's an upslope here, and it looks like I said, beginning coming in October, maybe it looks a little softer once we come into Q4. But let's go ahead and just take a quick glance at this monthly chart. Yeah, so the monthly is very interesting, actually. We've got a negative 10 in here. We've got everything is trying to roll over on the 21 is starting to roll, and that's going to be pretty decent support all the way up to around that 104. So 104 I just showed you 105.90 was the upper target. We're probably staying within there. And then it looks like we're forecasting as we come in, we come into 2024 in January, we're seeing the peak and starting to roll down all the way right into the elections. And at that time, the elections, it looks like there's a collapse in the dollar. I won't even speculate what that could mean, but let's as we look at that, that's forecast, and it's like I said, amazing when you start to get out too far. The accuracy goes down because we're going to have lots of updates here, and what will happen is it will even moderate or get more extreme to the downside. It's actually showing that we're going to come all the way back to the 200-week moving average, but it's not until this is 200-month moving average. This is not till 2027, so that's a long ways from here. But it does look like we have all the way into February, March, like we've got a general trend on this monthly chart continuing forward. I'm going to stick with the monthly chart as we come into crude oil. And what we're looking at is some peak values that are coming in here. It does look like we could stay positive all the way into the first quarter of next year. But I think what this chart's telling us is that we're going to get range bound here. And that's really what we've been for a while. If we go back to 22, we're looking at high-end range of 93, and then we've kind of moderated, and now we're getting back up toward that range up at 88. Do we go much above that? I don't think so. We could start to look at some Fibonacci retracements or things like that and maybe find something up there that maybe there's higher prices in here. I don't think we get above $100, over $100. I think we stay within this range, and I would be watching the market grid on this very closely. So I'm back up to weekly. Weekly is also suggesting, once again, that third week of September, we should start to see peak values in crude. There's a lot of stuff coming in there. So, and it's also Fed week. So there is a complete cluster of numbers, and that looks to me that September is going to be a significant event, and a directional event. And I will have a handle on this by the time we get there. I'll have some definite opinions and how things are setting up. I think it's a little too early right now. The analysis is that we still see some strength here in crude oil. All the things I told you, and I went through a lot of detail last night. Yeah, so I see someone talking about what we'll do at the end today, let's do some questions on the indicators and stuff. That might be kind of fun to do, and let's see how we're doing here. Yeah, we're 39 minutes in. It won't take me much longer to get through crude oil and Bitcoin, so we'll go to that. So we'll definitely unpack some questions that are coming up here. All right, let's go to the daily, and here's where you're going to see this surge, and saw it coming. The algos actually forecasted this going back all the way back into late August. We started to see an increase. It just continues to build, and that's the thing about markets. This expansion of this trend has just gotten stronger and stronger. All of a sudden, we're at 0.87 on ppm1. ppm2 is 0.28, ppm3 at a 0.2737, and these are all trend mode. So we're going to be in this thing. Here we are again around the 18th of September is where the peak values look like the moving averages are going to start to roll, and we're getting peak values here on around September 12th, coming in the week before the Fed. So there's definitely an event going there. Whether it will believe that we're going to see another increase, another 25 bips on the Fed funds, and then maybe we can call it done for the moment there as well. But anyway, this pattern here on crude oil looks like we've actually hit. And I always tell you folks, and now that so many of you have the indicators, the fib targets that came out on August 30 was 83.79, 86.18, and 87.62, and that's when the price was closed at 81.63 that day. And so we started to get these upward projections, and most of the time you'll get into at least a fib target 2, but there's something that's happened. If you go to the probability map that I show you, and I know it's in the videos on the PPMs, but if you go to the probability map, I'm just going to bring this up. This will be a quick segue here for just a minute. It won't take me long to get through this. I just want to show this really, really quick here. And so I'll blow this up so you can see it. But this is when we start to get on this this red line, we start to get in above this 1.0, we're at 0.8. Once we start to climb above that level on the ppm magnitude, then you start to expect an extended rally. And let me just go back here to where we are from that standpoint. Is that those numbers started to be hit roughly over here about 3 or 4 days ago. So all of a sudden, once you get to that ppm level, it says, hey, there's an extended move coming. And typically those will consolidate a little bit, and then there's one more leg up. So you would go to the weekly charts to identify that pattern from that standpoint. And that would be some of the numbers to watch for. And I'm trying to put those together for you every night as we go through the analysis. So let's go ahead and hit gold, Bitcoin, then we'll come back, we'll circle back to some of these other. All right, so this is daily gold, and daily gold's starting to look pretty weak with these higher yields. Look at the algos are starting to suggest we're going to roll down. The key level here is going to be the 200-day moving average. And that number right now is 1945. We're trading 1951. Is that the right number? That is not. 1922 is that number. So that puts us back down, retesting those lows that we printed back in August. But it looks like there's going to be quite a bit of downside here. So let's take a quick glance at the weekly. The weekly also is showing that the algos are starting to turn negative. We also have some Fibonacci targets on the downside on the weekly that we need to pay attention to, which is right now low target 1, 1826. So that's about $100 decline. That would certainly make sense if you start looking at the potential of these rates moving higher as well, and just staying up at these levels that I just was talking about. And that is definitely not going to make Peter Schiff happy at all. He's going to be very disturbed by that. But this looks like the algos are suggesting that we're coming in. Even the ppm 200 at the very bottom here is starting to forecast some negative numbers on the 200. So that number, once again, that's around 1840. So 1840, 1826 is starting to look like a very strong possibility on what's going on with these trends at the moment. So on Bitcoin, we're still hanging in there on that upward 40 that I've been talking about. We got a ppm 3 at 0.85, which is trend mode. There's basically like a 75+% probability that we hold there. There's also a fib target right at those levels as well. Fib target 1, 25,539. That average right now, 25,538. And the fib target that's there is, there's 25,539, the fib target. The moving average is at fib targets right now at 25,539. We've got the moving average right there at the 40 at 25,538. And the next fib target down below that is a 23 handle and then a 21. But the algos are suggesting, at least on that, we should see some stabilization, and we're at 0.85 on ppm 3. So there's pretty high probability that we'll continue to climb. I'm just going to blow this up because this is that moving average wedge formation that sets up. It's really set up pretty good here, where we're going the 25.5 to up around 27.7 is that range. We should stay within there. If we start to break down, there could be some acceleration. It could get ugly pretty quick, but it looks to me that we're going to at least try to hold this at the moment. So let's go ahead and just go to a daily chart real quick, see if we can get, this is interesting. So as of today's action, we got 3 new upward Fibonacci targets, which is interesting. And they are right now 28.1, 29.190, and 29.850. Algos are ppm2 is starting to look like a little positive. That we'd need to get back above this 10-period moving average minimum to actually get anything working. That's at 26,236. Get above that, then probably that downward 40 is where you're heading up, which are the numbers I just talked about, 27.7. That would be that range as well. I'm going to come back up on screen here for just a minute, just so we'll set this up. Let's see what time it is. We got about 12 minutes. So if you would, so I don't have to go through the timeline, just give me some things that that you were talking about. I can look through here and see if I can find your question. I think PE had one. Don't see red dots either on my charts. I'm not sure what indicator you're talking about there. So I would need some clarification on that. And if anyone has any questions on some of these indicators, I'd be glad to just go through a couple of things. I'm going to show you while that's waiting to come up. I'm going to go back over and I'm going to show you something here very quickly. I thought I had it set up here. Let me just see if I can find it. Bear with me. See if I can find this one setup I had. Here we go. It's setting behind. So this is my day trading setup. I just want to show this to you. This is pretty handy. Let me get this out of the way here. So I have the 5-second chart. So this is live. I can show you a couple things here. And okay. All right, P. I'll go through and talk about that. So what I've got going on right here on this chart right now is a couple things. And this is my setup I use. And if you click on a chart, you can actually come down to this corner box here, and you can click and make it full screen. So this is that 5-second chart that I'm telling you all the time. And it's actually 50 bars out. So right now it's at 1601. It's projecting out about 5 minutes into the future. And you can see we're getting a number of things. I have the Fibonacci targets up here right now, and it's probably pretty narrow range, but we are seeing that I only use the 200 ppm 200 on this chart, and you have to have a premium account in real time to get to these charts. But this 5-second chart is pretty brilliant. Right now it's narrow range because we've been locked down here since we reopened in a very narrow range. But when the market's a normal market, you'll see some really dynamic moves. And one of the things I look for, this red line is the 200 period moving average on a 5-second chart, which ends up to be 16.6 minutes. And this is such a good trend line on intraday. It's unbelievable, especially if you have this upward slope and you have a positive slope. So I look for a turn when we start to get into negative numbers. Right now, ppm 200 is 0.0006. So you get out into these crazy triple and 4-digit numbers, but it is positive. So we're seeing right now the algos are suggesting we're just going to go flat and come into here. But let me go back to this chart, and then I'll try to set up some of this stuff that we were talking about. But this is the simulation of over to my right in my office. I have 6 32-inch monitors on a trading setup. And so each one of these screens you see here are giant screens in front of me that I can sit back and when I'm trading actually be able to see these at a really high level. So I'm trying to simulate. It's the only way I've found that I can simulate my trading environment during the day. And this is pretty much a scalper's viewpoint of the world. And I just want to fix one thing here. Yeah, so I have the upper left, 5-second chart. Upper right is the 1 minute, and it's got the algos on there, and then it's got everything there. And then we have ppm on the bottom left is the hourly chart, and it looks like right now that it's going to turn up. So look for a move to the upside, possibly to come back to around 45.10. I don't think we get up to the 40, but probably trade back into the range here. Last trade 45.01, so there could be a decent little move here. And yeah, so someone's asking how you divide this. Man, listen, I'm like not a power user, but I keep learning stuff every day. The way that you split it up at the top when you formulate a chart, you can, I'm just trying to get to this place without messing up what I have here. But when you set up an initial chart, it gives you a bunch of possibilities. Here it is right here. You can see if I click on this, these are all the different setups that you can put together for the chart. So I chose the 4. You can have them thin. You can have all these different preset modules here, and it really makes it pretty good. And then you have these other things that you can set up here for different elements. Like I said, I'm not a power user, but this is how I set this up, and then I save it as a saved day trade layout. So yeah, and Todd's just saying you select layout, and then you can go from there. But this setup here, folks, if you're an intraday trader, and this is the video that I'm putting inside of, so those of you that bought the indicators, there's a section with understand how to use these. What I'm doing with all of that inside of that section now is I'm going through and showing you how to actually set up charts and go through each one so you know which indicators are going to work the best together. I basically show you every night my primary setup, which is ppm 1, 2, 3 and ppm 200. Those are always on there because I'm reading the moving averages, and in some cases you can also put the percent probabilities up there. There's a bunch of stuff, but I'm doing a video on that that's really going to help everybody a lot from the standpoint of getting that on there. So I'm just trying to see. Yeah, David Nichols, thank you. I absolutely love those Waitard SMAs. It's like, yeah, unfortunately, there's no way to put the ppm, but when you do change that, David, to that value, you're actually getting to that point where it's calculating the right angle of attack and everything based on that. So yeah, so folks, I told you this before, but in the indicator package, I made it easy so you can just add the Waitard 10, 21, 40, and 200. Those are the ones that I use religiously. But if you have some other moving averages, you can actually put one of them on, and you can actually edit those and put your own moving average in there, which is really, really good. And but but this setup, I love this setup. But like I said, this is the setup I have on this giant trading environment I have here with 632s, and you can't get too close to it. I actually have keyboards that I set back about 6 feet, and I'm trying to figure out how to do a interview with me in this room so you could see the actual environment here. But it's pretty crazy from the standpoint of being able to see these charts. And then I have the center monitor, the lower center monitor out of the 6 is the place where I trade, which I do use TradeStation. So you're just looking at that environment. So yeah, I'm just looking at a couple of comments, and we're going to finish up here. We're right at an hour, so appreciate everybody hanging out and just doing some of this. Yeah, if you haven't got these, go to the kendallreport.com/indicators, and that'll get you set up there. And like I said, I am actually working diligently. It looks like sometime in October we're doing a symposium, online symposium. I will let you know once I get it more formatted. It's going to be pretty intense, and it will be basically a live master course that will be all laid out. I'm putting all the PowerPoints and everything together. It just it's growing like a monster at the moment because I really am, there might actually have to be 2 symposiums. And then the plan is, by the way, to do something like what I'm doing online is plan on probably going to Vegas in the spring. I'm looking at locations to do that, and we will do this real time and hang out together, and we'll figure out at least a couple of days. I suspect a day and a half at least. It should be a lot of fun. I've got friends there in Vegas that I probably will bring in for presentations and some other things. So it's not going to be just all me. There's going to be a number of things I'm trying to put together. So the live one will be really exciting. So just point out something here real quick before I bolt out of here. Is we were seeing this forecast here for the market to break down below the 200. Let me just move this around just a little bit. This is what we were seeing just a little bit ago when we started watching this. And I'm telling you, the power in this darn 5-second chart is insane, because we just moved from 01 down to let's see here, what we moved from. About this was 02.25 down to 01. That's not a big move, but if you're a scalper, these are seconds. So we're looking at 1550 to, we're looking about 20 minutes, believe it or not. That's why this chart is so amazing. It would be nice. A Discord group would be so good if we could all talk amongst ourselves and trade ideas. I have went in there, so we need to set up probably on the Discord. We probably need to set up something. I thought I turned it on so everybody could talk, and I'll leave it up to you guys. I haven't been able to participate in there as much as I'm hoping, but I think that would be it. Market flow can be really, really powerful as well. I see somebody talking about that, but that'll take more time. I promise you this is that as we go through, I'm going to do some real live stuff, just showing how to use market flow. I'm going to go back on this chart here. I actually want to do a live with this intraday to be able to use the this setup here and show you and walk you through. That's basically what I was working on today. I'm going to have that video in there walking through the thought process and price movements and how to anticipate moves and all that stuff. The invitation to the Discord is for way we've got it set up is for people that bought the indicator. There's potential to be a lot of people in there. We'll start trying to develop this, and this is the big issue, folks, is I don't have time to develop that channel, and I'm not super good with the not very good with the platform itself. So, but yeah, we need to set up. It sounds like, Bo, we need to set up some Smurfs for the Discord as well. I don't think that's set up as well. Yeah, we did oil. Yeah, we did oil. So yeah, anyway, folks, it's hour 3 into the broadcast. I'm going to call it here. But thanks for hanging out. Get the indicators, kendallreport.com/indicators. If you are a previous purchaser of the first one, send us an email. We'll give you a promo code for the customer appreciation discount. So we appreciate everything. So I will have to. I'll check out some of that stuff with the Discord as well. Yeah. Hey, folks, thanks for hanging out. I'll be here at the same time tomorrow. Looking forward to it. Good day trading tomorrow, I hope. Thanks a lot. Yeah, you should have received an email on when you bought the indicators for Discord. Right as I was saying it. No problem. Hey, Banana Central, did you send that email? I'll look for it right now. I'll get somebody on it. Did you get an email and a confirmation email? Let me know. All right, we'll see if we can send an email out to everybody that bought. PE, make sure you send the handle that you used on WaveTech. Whatever your username is, send that. Thanks a lot. I hope you can hear me over the music. Thank you.